The rapid decay of the global economy has not subsided despite what we keep hearing about with a magical and fantastical V-shaped recovery on the horizon clearly did not happen. The markets have already discounted the potential of any downside. The algorithms are just ignoring it. Massive levels of retail investment into stocks have been seen through the EPFR data, and it looks like they have watched their assets appreciate. The disconnect between the real economy and stocks has never been this wide, so this should be a very interesting second half of the year. You came here for the truth, so let me unveil that for you. Today we are going to talk about the major cutbacks, and this takes place really on many levels. I'm going to cover a lot of information today. It's going to be an interesting one. We're going to get into many topics. Let's begin. Directly from Airbus website, necessary reduction of approximately 15,000 positions across Airbus's global workforce. They told you this wouldn't happen. Company after company after company are laying people off. It doesn't matter if they got a bailout. It doesn't matter if they got a loan. Eventually, these companies will kick people to the curb. Air traffic not expected to recover to the previous levels before 2023 and potentially as late as 2025. What does that tell you for the state of the economy? Of course, it's just one small piece, but isn't it interesting? Airbus is grateful for the government support that has enabled the company to limit these necessary adaptation measures. They call them adaptation measures, and that means getting rid of people. They use all these ridiculous names: furloughing employees, laying off, letting people go. Look, they're fired, but you can't say that. It's not right. And so they use this confusing language all the time to make it seem like you're on a fluffy cloud or something. Look, if the person doesn't get a paycheck, there's a problem. Whatever you want to call it doesn't really matter. I know there's a lot of people who don't want to hear about this because they're still dreaming about a V-shaped recovery. Workers getting laid off for a second time as we see businesses closing yet again. This is taking place in a few states, but of course it could happen in many more. The economy right now is absolutely crushed. Perhaps you could say that it's not at the very bottom at this point, but certainly it's nowhere near on any level. It is nowhere near where it was leading into 2020. And then we have this issue: extreme delays for millions of taxpayers awaiting IRS refunds. There have been so many different problems that we have seen here. People are waiting for the stimulus checks. People are trying to line up and get their unemployment. There were lineups for up to 10 hours in certain limited cases that I saw. What about the food bank lineups? What about every problem that has been compounding these issues? And what really matters here is that the average person is getting hurt. So the Federal Reserve sets up this thing called the Main Street Lending Program, and they're going to be able to give loans to those small businesses because they really care. And then we find out that they're a top 5 holder of the corporate bond garbage. I just did a video about that. And there's so much money going into it, it makes the other programs for Main Street look small by comparison. They lie to you and I every single day. The whole world is believing this nonsense. And unfortunately, the average person's always getting the short end of the stick. We have seen one very obvious factor here, and that is the central banks around the world are desperate to try and devalue their currencies, and it comes up in certain things. In this example, gold. Gold prices power to 8.5-year high, and they're telling you that there's more upside likely. Imagine that. Gold had hit $1,800 an ounce US. And if I'm not mistaken, in some other currencies, it's at a record high. They have been trying very, very hard to push this down. If you want some more information on that, you can always check out GATA, G-A-T-A. They have many resources about the manipulation of what happens with the precious metals. But we already know that there have been so many instances where these different traders at these different financial institutions were caught manipulating the price of precious metals, and they did so, according to what I've read, very easily. The problem, of course, is systemic. They're never going to actually come out and straight up admit it. But when you see the price of gold and silver, it really, really looks interesting just because all assets have skyrocketed, and you would think gold and silver would be higher just because everything has basically gone into a heavy level of inflation. If for no other reason, you would have seen this. But we know about the manipulation. It is a proven fact. Where the price is going, I have no idea. What is the fair value of it? I'm not sure. There's people out there who calculate it based on the current money supply, based on historical documentation. Look, I'm not saying any of that. I'm just saying, isn't it interesting that they have really gone so far above and beyond anything they have ever done before? Assets, real estate, stocks, anything, doesn't matter. They have all accelerated dramatically from 2009, basically up until today. And there's one asset class that has not performed well, even though this is historically a time in which it should. All I gotta say is that really raises some questions. Here's the reality of the situation that we're in today: real GDP and prior expansion growth trends. Okay, so you will see at the bottom, as it might be difficult to see on your screen, here we're looking at the real GDP and prior expansion growth trends. I wanted to focus on something here. As you can see at the bottom, there's a little legend showing you the real GDP. That's the black line. The orange line, that's the 80s trend. The green is the 90s trend, and the blue is the double O's. And what I wanted to show you is that as time goes on, this gets worse. It gets worse and it gets worse. And yet they've been accelerating the money printing at a rate that is really exponential. The same situation with the debt. They have both been going up at a rate that is truly unprecedented. There is no real other way to explain it. You look at the GDP, it's not the same at all. We saw what happened here in 2009. We're seeing the same thing today. The pace at which it was growing previously simply is not there. The excuse is that it's bigger today than it's ever been, so you're going to get slower growth as time goes on. Is it really that much bigger than it was 10 years ago, 20 years ago? Yes, of course, but not by leaps and bounds. It's not as if we're comparing 2000 to 1900. Okay, there are some differences there. We're talking about a 20-year period in the growth rate. The money supply is going exponential, but the growth rate, not even close. And that tells you that the expansion of debt, the expansion of the money supply, cannot generate real established growth in the economy. It's simply not going to happen. This is just a closer view of that same chart, and what we're looking at here is the real GDP, the black line, as well as the projected GDP, that's the red area, comparing that to the previous trends, and you can see it for yourself. These are the percent job losses, and we are comparing this all the way back 1948 up until the present. I'll pull out the highlighter here. On this side, you're seeing the percent job losses relative to peak employment month. And at the bottom, number of months after peak employment. So right here, you're seeing the so-called V-shaped recovery, pretty funny. And in all of these instances, you could see, depending on which one it is, all right, so it does kind of V-shaped recovery. You can see that, maybe more like a U-shape. But look at what happened 2007. It took quite a while. In this case here, it has fallen so far down. In order to get back up to where it was before, we're going to need a fairy tale type of magic and Snow White and the Seven Dwarfs action to make this happen. It's just so unrealistic, and yet I keep seeing this information all the time. In this article here, it's talking about the San Francisco Fed president, and I actually found this to be interesting, not V-shaped. So already this guy from Bloomberg, by the time you're seeing this video, he's probably fired for saying something like that because you're not allowed to tell the truth. Some data indicate that the economy is starting to recover. Retail sales jumped 17.7% in May from the previous month, and a gauge of manufacturing rose to the highest level in more than a year. But according to the Fed president, that doesn't mean the country will see a V-shaped recovery. Wow, I am shocked to see that. We certainly see some signs that are positive, but I would hesitate to call this a recovery. Interesting. So we'll see what happens here anyway. I just thought, because we keep talking about the V-shape, I saw this article, I had to include it. Latin America seen heading for deepest slump since at least 1901. If you look around the world, the situation looks different for everybody. Certain countries have started to turn this around, and others are not looking good right now. World Bank forecasts a 7.2% contraction for the region this year. We'll see what actually happens. But regardless, without that trade, without demand for certain products in a lot of these places, they're in big trouble. In Los Angeles, an economy built on freelancers crumbles. Creative workers with multiple gigs are among the worst hit by the recession and face long roads to recovery. This is really big because in certain areas, as they're mentioning here, they're being hit very, very hard. Of course, that drags down the economy as a whole. You can't get away with it today because there's so much interconnectedness, not just with companies, corporations, but of course with people too. With bankruptcies surging, 2020 may become one of the busiest years for Chapter 11 filings since the Great Recession. I think it's probably going to surpass it when you look at all the data that is available. To me, it's very clear. Look at the store closures that are expected. Look at the layoffs that are expected. We haven't even gotten there yet. Imagine. People are talking about the V-shaped recovery. They're talking about how the economy is doing well. We haven't even gone to these levels. Think about it. For many businesses, they basically are waiting for the loans to expire. Once that's over, there's going to be a whole bunch of people that are booted out. And of course, we have the grand disparity in between Wall Street and Main Street. And you can see that on that chart represented by the extremes, where you have Wall Street being the NASDAQ, the technology stocks, which have been really going off the charts. And then at the bottom, the continuing jobless claims, which are at approximately 20 million. When you see what has happened to so many people, reduced salaries, reduced hours, taking on jobs that are significantly lower pay, but hey, they got laid off. They need to make an income somehow to survive. These are not really going to be included in so many of the statistics, and yet this makes up a fairly large chunk of the people out there. And the FANG stocks being really all the rage these days, we have seen how really wild the growth has been throughout this period. There's really no doubt about it. And to finish off the video, my friends in Sweden, I got one for you. Swedish central bank boost QE program to fight the downturn. That's right. They're holding rates steady. They're boosting QE. And their QE is going to include corporate bonds for the first time. Excellent. They're doing exactly what the Federal Reserve is doing. Once one central bank does it, it gives all the others an opportunity to do so. It's fantastic. Devaluing the currency. It's wonderful. They're going to own everything, just like the Federal Reserve is going to own everything. These corporations could take as much risk as they want. They can push it pedal to the metal, and the central banks are going to bail them out. You're not getting a bailout. You're not getting anything. You get a boot in the face. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to check me out on Instagram and Twitter, I'm available making content every single day at The Money GPS. If you want to understand e-commerce, you want to know what's going on, how to make money from it, all that detail is in my free e-course, theamazongps.com. The financial system is designed to be convoluted and confusing so that you don't know what to do. You've got to rely on somebody else. But when you read these two books, you can have that foundation. You can understand the principles, get the details you need, all in the link in the description if you want the audiobook, themoneygps.com. Wait a second, don't go anywhere. You've got to see this video. It's so important. Click on it and I will see you there.